All right, back to work. Back to work. Hope you guys had a fantastic day. CPI is out. The FOMC has spoken. Markets are ripping, and I see 5 important clues on these charts right now. Put them all together, and it's easy to see traps are where the money is made tomorrow morning. I get some bull traps, some bear traps, and of course traps. They come in lots of different shapes and sizes, right? But don't you worry. By the time we're done tonight's video, you'll have an easy roadmap to make some money off traps tomorrow morning. Now, before we jump in and talk my favorite trades tonight, one of the most important videos of the week, before we kick this thing off though, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these videos, if you like these lessons, hit that like button for me. Give me a shout out, give me a hell yeah down in the comment section below. Thank you so much for tuning in, supporting our channel. Enough of the intro though, Joe. Let's go make some money on Reaction Thursday. Boy, charts are all ready to go tonight. NASDAQ triple Qs are all ready. Oh, the E-mini and the SPY is ready. I have 5 important clues right now. Busy charts right now. That's all right. They're pretty simple. Put them all together. 5 important clues. They're telling us where the best trades are waiting for tomorrow. One of those 5 clues is right here on these 60-minute time frames. We are bullish overall on the S&P and SPY, bullish overall on the NASDAQ and the triple Qs. One very important clue is the 60-minute time frame because it gives us the overall direction bias. We know overall the bulls have all the control. However, these are great for overall direction, but they don't give us levels of support and resistance, and they certainly don't help us time the perfect entry for tomorrow. I have 4 more clues on some faster time frames, some tick charts. We'll grab that in a second and talk about entry tactics for tomorrow. Before we do that though, let's check our schedule for tomorrow because we have one more inflation number coming out tomorrow. We all forgot about this, I'm sure. We have another big inflation number coming tomorrow. Obviously not as big as the CPI report and the FOMC we saw today, but you definitely want to keep in mind out for tomorrow morning, 8:30 Eastern time, that PPI number coming out. And of course, we'll have a front row seat for that tomorrow morning in our trade room. So don't worry about the jobless claims, the PPI number, another inflation number coming out tomorrow. Keep that on your radar tomorrow. But let's get back to our charts though, because we have a lot to cover in what might be the most important video of the week. I mentioned earlier 5 clues overall. One of those clues is the overall bullishness we have right now. But let's talk entry tactics right now. Let's go drill down to some tick charts right now. Tick charts make everything so much easier, especially pattern recognition. All the time frames, upper left-hand corner, the 7,000 tick chart there on the E-mini and the SPY. And if you're watching for the first time right now, that yellow line right there, tough to see there, that is the 21 EMA. It is pretty much the only indicator we need to find lots of winning trades each week, every morning in our trade room. Now, I got four more clues here on the chart right now. They're pretty easy, so let's roll with it. First things first, whenever we see a big move in one direction, we usually get a 2-legged pullback and a retest of the high. At this point, if the sellers hold that high, this usually results in a much deeper correction to attract in more buyers at lower prices before we make a run back up again. Keep that in mind. That's one important clue on the tick charts. It's a big move that has now been retested and rejected off that high. Second clue, very big clue, is a news spike. In our free video class, we talk about measured moves, right? Anytime we have a news spike, we can measure the size of that news spike, find the lowest part of the pullback, project that up. That creates a very attractive area of resistance overhead. And one of the most important things is a trading range on the chart right now. You know me, I love me some range markets. Why are ranges so important? Well, because they act like magnets. Most importantly, they rotate, right? Range rotation. When I see a range like this, I want to buy low, I want to sell high, and trade that rotation. And speaking of trading ranges, there's actually one range all the way back there. We had a range earlier on in the week. Anytime we see a range breakout, we oftentimes see a breakout pullback, right? The breakout pullback zone is down there at 53.85 half to 53.80. So put all these clues together. Again, we got some key levels of resistance up overhead. We are way high up right now on the chart. I would love to get, as we go higher, I would love to get some bull traps off the high there. I have 2 favorite bull traps. We'll talk about that in a moment. If we keep going higher, because of course tomorrow is PPI Thursday as well. If we keep going higher, I want to look for a breakout pullback off of that trading range. This does seem a little bit unrealistic after such a big move up that we saw today, but I've got two ways to profit on a breakout pullback. We'll talk about that in a lot of detail tonight as well. And if we do get that roll lower, I think this is where the big money is potentially made for tomorrow. I got some bear traps. I got some double bottom reversals here. We have, again, plenty of ways to make money. Lots of traps, bull traps off the high, bear traps off the low. Let's talk about as the price goes higher here first, because it looks like we're trying to rotate off that low right now. Let's talk about those two bull traps off the high. There are two types of bull traps I'm going to look for. One is called a crown reversal pattern. I know you guys love these patterns. I get so many emails every week, guys, making money with crown reversal patterns. Very simple. As we go up into the high up there, we are way, way high up. We're at resistance. We're at the news spike. The range below us is a magnet. This is a horrible spot to be buying. If I can get some rookies coming in and trying once, trying twice, look for that lower low in price and to move just above that high. A number of folks today who grabbed that short off that one right there off the high. Lots of those bull trap. We call these crown reversal patterns in our trade room. If you're in my free video course right now, this wraps together a failure pattern and a bull trap pattern. I call those a crown reversal. It's a bull trap off the high of that trading range. Another one I want to look out for tomorrow is a V-top. We might run up and there might be so many buyers that take profit up there. It may just collapse right back down in. Look for that collapse and look for it to grind down. Now, these are easy money if we can get this tomorrow. The hard part though is you cannot chase this as it rolls lower. Promise me you will not chase this going lower because your patience is rewarded. Draw a trend line off that low, up around that high. Now pay attention, look left, find some prior swings. And these are almost guaranteed winners when you see these on the chart. Now, of course, this could be a bull trap like I'm showing you right here, right? A lot of times these will be a failure pattern right above the moving average, a failure pattern into a pullback combination. Now, remember, ranges want to rotate back and forth, right? So if we get that V top off the high, we're getting that short, that bull trap, that buyer failure, that pullback combo. Remember, the size of that move up, right, is the size of that move down. That will give you an idea now of where to take some profit, and also too, where to look for some bear traps down there to buy it right back up. Now, later on in the video, we'll talk about the bear traps down because there's quite a few ways to trade bear traps off of that low. Before we talk about that though, let's talk about the breakout pullback. Breakout pullbacks are very, very common. Breakout pullback, right? If we keep running higher, there are two types of patterns I'm looking for. One is a bear trap to buy during the breakout. Now, as I mentioned earlier, anytime we see a range breakout, the size of the breakout leg can be used as a measuring leg, okay? So that will give you where the market wants to go on that breakout. This is a simple bear trap pattern. It's a higher high in price and a move just below that moving average. A lot of examples of those inside the free trading course. And then as we go up into that measured move, we call these ABCD, then we look for that two-legged pullback, right? That two-legged pullback. When I say two-legged pullback, think about a bit more than a measured move, right? A bit more than a measured move, right? Two-legged pullbacks after a big move up. Very, very common. And as always, I'm not going to pick the bottom on that. Stop trying to blindly buy those levels. I like the area. I like the area for a breakout pullback, but I can't pick the bottom. What I'll do is I'm going to look for my favorite entry pattern on these two-legged pullbacks, these breakout pullbacks, is a failure. What's a failure? Failures are pretty simple. I'm going to trap those bears in, get those rookie bears trapped in, let them try twice, then I know where their stops are. I'm going to use that failure pattern to squeeze those stops going higher, and on the way up back to retest that big high, I'm looking for one simple pattern. It's called a bear trap pattern. Same pattern right there, right? Same pattern right there. Higher high in price, a trap right below that low. All right, guys? So this is the breakout pullback. in a nutshell. If we keep on ripping, again, who knows, right? FOMC's out. The markets are loving on what they heard today from the CPI. We may keep on going higher, right? If we do, I'm looking for bear traps here. Do buy as low as I can. And then after we get that measured move there, right? Look for that two-legged pullback. It's that failure into trap combination. I know you guys know this, making money with this stuff, so well done on that this week. But let's slow down for a second though, because we've got a lot so far in this video. I know most folks watching right now, you know these patterns, you're making money with these, but if you're watching for the first time right now, this might be a brand new language for you. What the heck is this guy talking about? Don't you worry. I teach all these entry patterns. I have hundreds of examples of the traps, the failures, range reversals, range rotations. Everything's covered in a lot more detail in our free video classes. I'll put a link up top there for you, upper right-hand corner. Grab that link up top there. Take that free trading course, because the strategy you're going to learn in that short video series will teach you a stupidly simple trick we use in our members trade room, so we always know where the best winning trades are going to be each day. Now, knowing where is important, but timing the entry is the most important. I help you time the perfect entry. I'll teach you failures, trap patterns, all my favorite entry techniques. I cover all them in that free video course, guys. The markets are so good right now. If you're not making consistent money every day, if you're still missing the best entries, if you're struggling to qualify for a funded account at Apex or Top Step, hit the link up top there. Take that free course. It is perfect for someone trying to make the jump into full-time trading, because that class, right, that video course will give you a simple roadmap to follow, know where to look for trades, how to time the best entries. Also be aware too, I'm going to put all the important links tonight in the description of the YouTube video. I'll put the free class links down there. Definitely start there first. Start making money out there on your own. We trade together every day in our trade room. I'll put the trade room membership links in there for you, the description of the YouTube video. And also too, I post a lot of updates on Twitter or X, charts and videos and mindset stuff during the day. If you're on Twitter, X, give me a follow. Again, all the important details, description of the YouTube video. But now you know, right? Now you know, as we go higher here, how to find some bull traps, those crown reversal patterns, how to use a V top to make sure we don't chase after it, right? Short that first test off that high. And again, if we do end up ripping, right, how to grab that two-legged pullback, that breakout pullback off of the high. Again, though, do not be surprised here if we squeeze up and wind up rug pulling right into that V top, right, and that run back down, measure the top, measure the bottom from there. Okay, now that we know how to deal with this thing going higher here, let's talk about what, in all reality, again, when we get a big move like that, two-legged pullback, retest the high, we are usually in store for a sharper correction the following day. I want to be ready for that if we do end up going lower here tomorrow. If we get that run going lower, now I'm sure people are wondering right now, how would I short this, right? How would you short this during that correction? It's easy. It's always going to be a bull trap. It will always be in a bull market overall like this. If you want to short this thing down to that breakout pullback zone, we find a lot of these in our trade room every week. It's always going to be a bull trap pattern. And it's very simple. You want to see a separation off the moving average. That's the key, okay? Remember this. You want to see this thing separate off the moving average. It'll be a shallow pullback. It'll be a lower low in price. You want to go right above that high. Nice, strong red signal candle. We teach this stuff again inside the free video course, and that run going lower. Again, these are called bull trap patterns, right? They're very simple. The key is this. You want the separation off the moving average. A lot of examples of that inside the free trading course. Now, once we get down here, it's very important. So pay attention. It's very important. If we do end up rolling lower here, the amount of momentum coming off that high is very strong. We're overall bullish. However, with that short-term momentum, you have to expect the bears are going to want to come up, hold the underbelly of this range, and retest that low before they make that run back up and take out those all-time highs. This is a very important factor of understanding how to time the proper entry. For example, my favorite trade on this as we go lower is I would love to. Now remember, I'm not going to pick a bottom down here, right? I'm not going to be foolish to pick a bottom down there. We're not going to buy blindly off that area because for all I know, it'll keep going. You probably have learned that lesson already. We're not going to blindly pick the bottom. What I will do though is, this is a great spot to be a buyer, right? Because we're an overall bull market. This is the last place you want to sell, right? Because you're selling nice and low. So let's trap in some rookies here and look for one of those 1, 2 try failure patterns. Again, why 2 tries? Because I need, with all that bear momentum, I need their stops to fuel this move going higher. Ideally, what I want is I want a failure pattern followed by one of those bear trap patterns on the way back up into that range above, right? The range above us is a magnet. It'll want to go right back up into that range here. And again, that trap pattern needs to separate away from the moving average. You'll notice it, right? It'll pop up and start separating above that 21 EMA. And if you're not quite there, what that means yet, we'll talk more about this tomorrow morning in our trade room. Now, the next part here is very, very important. So please, please, please pay attention. I want a failure pattern. If the failure pattern begins to set up like this, all right, if we start getting stuff like this, okay, where the bears try once, bears try twice, I don't want to buy up here. I don't want to buy up there. I'm buying too high now. Now my risk is here. My reward is there. It's just not worth it. Okay. So if that failure pattern starts to run higher here, what we do is we now look for ways to get in on traps. Okay, so if it starts to grind up like that, if it grinds up like this, we're looking for ways to buy as low as we can now with traps. Okay, so again, the ideal scenario is we run down, we trap the bears in, I can take a small amount of risk for a nice big reward. But if that failure begins to pop up and 1, 2 like this, careful, right? Because now, see the difference there? See, now you're buying way up here. My risk is all here. My reward is right there. That's not going to be a reliable trade. You can't build a career around the entry there, okay? So if we V-bottom off that low and start really kind of grinding higher here, keep your eyes on those traps, right? Getting in. And one of my favorite techniques is draw a trend line off that high, bring it down off that low. That is a gorgeous way. Bears trying, bears trying, bears trying. All their stops are sitting right there. A nice strong green candle closing above that 21 EMA. Squeeze those stops and run the sucker back up into that trading range. Okay, now a lot of times we'll get that strong run down. We'll get that failure pattern. We'll get that winner popping back up. We'll take our profit off. You almost always want to take profit at the underbelly of that trading range. The underbelly of that range is almost a given, almost a gimme for a profit target. So take some profit off there. Sometimes there are so many bears there that will come in and they're going to whack it back down again. Okay, this is not a reversal. We are so high up right now on this bull market. This is a gift from the trading god. This is not a reversal, right? Do it again now. Do it again. Trap the bears in, 1, 2, because think about this. Anybody who sells short right there, they become buyers when they take profit right here. These are rookies. These are inexperienced traders, small, tight stops. They can't defend themselves like the smart money can up here. Make sense? So do it again. These double bottom retests are some of my favorite trades every week in our trade room. They really are a gift from the trading gods, right? So failure pattern into that bear trap pattern going higher. And the same rule applies here, right? If that failure, if it V bottoms, boing, right back up again like that, look for those traps, right? You want those traps, again, to get that risk reward ratio in a situation you can make money with. All right, guys, that double bottom retest. All right, I'm getting excited to talk about this stuff right now. This is a great plan for tomorrow. So now we know how to trade this thing going higher. We know some of the challenges down here, right? How to avoid some of those little traps down there. Let's now go to the NASDAQ now. NASDAQ, I hear you over there, NASDAQ. You're getting lonely. I know. I owe you some time too on the NASDAQ here. The NASDAQ and the S&P are very similar, obviously. You get a big bull market right now on the NQ. We are just in the stratosphere, right? Elon Musk is up there on Mars right now. Like, all right, come on, you're almost here right now. Again, the 60-minute time frame is quite obvious, right? We're bullish. We're way high up right now. Over on the tick charts, the tick charts of the NASDAQ are pretty, right there, they're pretty similar. We have a very, very big move higher, which always tells us that gotta be careful buying high, right? Gotta be careful buying high after a big move. We got this beautiful range right there in the middle. And of course, as we always know, right, ranges love to rotate back and forth. Gorgeous triangle for rotation, right? Back and forth, buy low and sell high. And one very cool part of this chart is there is your news spike. Anytime you see, it doesn't matter what news event it is, right? Could be any news event, it doesn't matter, right? We didn't get one in the FOMC, right? There really wasn't much of a news spike during the FOMC, right? So news spike of a CPI, pin it right there. There's your news spike level, right? There's your level of resistance overhead here. So the NASDAQ is very similar. We talked about earlier on the E-mini, right? As we go higher, this is the last place I want to be buying. Again, it may keep going higher because we're riding high in emotion after the FOMC announcement. But if we start seeing these buyers come in and try once, go lower, try twice, that is your crown reversal. It's basically a bull trap and a failure pattern combined. If it does pop up and get whacked back down, starts grinding right down, these are really easy. The hard part though is simply don't chase after it, trailing off the low, up around that high. I love these entries. These are almost guaranteed winners. If you find the right entry off the high, bull trap, buyer failure, pullback combination. Again, you're going to learn all the entry tactics I keep talking about inside the free video course. And again, right, if we keep on going, right, if this thing keeps on ripping and running higher, it's always going to be that bear trap pattern on the way up, higher high in price, right? Below that low, bear trap pattern on the way up. And then once we get that measured move target hit, we start watching for that pullback. Remember, the pullback's very easy. It's a two-legged pullback, right? It's one leg, two leg, a bit more than a measured move. And again, we don't pick the bottom, right? No. We don't pick the bottoms on that because for all I know, this will shoot lower, start grinding down, right? If that starts grinding, you know what to do now. Trend line there, channel there, right? And short right there, right? If this thing pops up and grinds down, do not fight, right? That direction. It wants to go back down into that trading range. But again, a lot of times though, runs up one leg, two leg, a bit more than a measured move. We start using all these prior levels of resistance now become key levels of support. We don't blindly buy off those levels. We wait for the price to pull back to that 21 EMA. We let the rookies go first, right? No, you first. Please give it a shot, right? Take a couple shots going lower because if they fail, those stops get hit for that stop run, right? That's a failure into a bear trap combination. Anytime I see a breakout pullback, this is kind of the sequence I look for, right? It's that bull trap, that bear trap on the way higher, right? Again, think about that measured move going higher, take your profit off, right, up at that measured move top there, and then wait for that two-legged pullback, failure, bear trap, retest the high, rinse and repeat. Once you see how well these work, you will never want to go anywhere else when it comes to trading breakouts in a range breakout. And really, I'll tell you, on the NASDAQ too, even more importantly, right, if this thing winds up rolling off that high, all of that momentum, even though we're a very bull market overall, all of that short-term momentum is going to want to pull back, hold the underbelly of that range, right, and retest that low before it makes that run back up again. So same basic principle I talked about earlier, right? If we wind up all the way down here, if I can get a good-looking 1-2 failure, I can take that because my risk-reward ratio is still pretty good, right? That failure works, right, going up. But if this failure starts popping up like this, right? No, right? I do not want to buy like that, right? Now we're buying way too high, right? In those scenarios, it's all about traps below that low because then my risk is here, my reward is here. It's a more balanced risk-reward ratio. You can build around that, right? As a trader, right? And again, if we're lucky tomorrow, we'll get that run down, we'll get those failures, we'll get that winner popping up. And if they do go back and retest the low, these are again one of my favorite trades here, right? With that double bottom again. These are called double bottom retests, right? Trap those bears in, get that failure. And again, at this point here, it's all about that bear trap combination. All right. And again, you'll see a lot of examples of these. I have like 100 or so examples of failures and bear trap patterns and combination setups inside of that free video course. All right, guys. So that is the game plan, right? That's the game plan for tomorrow. I know I covered a lot in this video tonight. I try to keep these videos as simple as I can, but I also want to make sure you guys have a roadmap. That way you're prepared mentally and technically, no matter what these wild markets throw us here for tomorrow. So take some screenshots, watch this video over again. Any questions, hit me up in the comment section below, but that's the plan for tomorrow. Now, speaking of tomorrow, don't forget 8 o'clock Eastern time. Guys, the best way to start making consistent money in these markets is come out and learn this stuff and trade with me every morning in our trade room. I'm going to put all the important links tonight, the free class links, the trade room membership links, my Twitter feed, all that stuff will be down there for you, the description of the YouTube video. I would definitely recommend start first on the free video classes, learn the strategy, start making money on your own. Everybody loves the free video course, so enjoy that. And don't forget, any trouble getting access, any help getting started, don't be afraid to call the office, use live chat. We're always here to help out if you guys have trouble getting started here on the free videos. Right, guys? Hope you learned a bunch tonight. Hope you use this knowledge to make a killing and crush these markets tomorrow. And hopefully I'll see you sometime soon. Trade with me, 8 o'clock Eastern time in our trade room as an advancement. In the meantime, guys, be well, be nice to each other out there, and you better be here next time. Adios, amigos. Bye for now.